results we need to take note of. Anupam Rasayan is the first management that joins us on the show today. The company witnessed sequential improvement in the second quarter, but earnings year on year, if you compare it to it, looks a little weak. But the important part is what happens from here on, where the company expects the volumes from agrochemical space to improve gradually in the second half. Vishal Thakkar, the Deputy CFO of the company, joins in now. Thanks a lot, Vishal, for joining in. Before talking about, business demand and pricing, let's talk about working capital. I'm looking at your numbers, and the working capital is nearly 600 days. That's almost 2 years. You've been talking about bringing it down to levels of 220 days or so. What is leading to such a big surge? What's your receivables picture like right now? Because that's one point of contention that investors have, and they're really beginning to get concerned about it.
Mangalam, thank you. Thank you for getting us on your channel. And yes, what concerns you have raised is a concern that we as a management also have, and fairly so. I think if you look at the working capital, you have to divide it into two different parts, and that's where the challenge is, if you really look at it. One is that because my sales are lower, my ability to unwind the working capital is lower. Also, when the sales are slower, the customers will be paying on a lower on a longer term, and they request us for that. These are all the customers that we have been doing business with over the last 5, 10, 15 years, and we need to work with them during this kind of a downturn, where we have been supporting them, and that's where the days have expanded. Days expansion has happened, as I said. Working capital ability to reduce the working capital has been lower, and two is also because my sales are lower, the number of days look even further. So it's a numerator and denominator both there. If you look at it, we believe that the next year, which as you rightly identified, that my Q on Q growth has been there, YOY has not been there, but we believe that the H2 will be far better than the H1, and we believe that FY26 should be back to a good growth time frame, growth journey that we have seen historically. Once we see that, you will see that these all working capital will easily come back to a more normalcy period that we would have seen, especially if you really look at it, like my 22 versus 23. If you look at it, my 22 was a very weak year in terms of working capital, which had improved in 2023. Unfortunately, 24-25 is a period where we have seen very significant level of headwinds, especially in the agrochem cycle, which is the key reason that you see that these numbers are not in line with what we would expect assets to be at.
Vishal, good afternoon. Thank you for joining in. Have you put a number to that improvement? You're mentioning that the second half would be better than the first, but do you expect this number to trend down to say 400 days or maybe even 300 days by the time you finish FY25?
So see, I will tell you two things. So if you ask me on the 25 numbers, 25 numbers should look like similar to the 24 numbers. So we should be looking at a similar kind of a range that is there. So the numbers that you were speaking, probably that's where we would be. That's what we are targeting for the first phase. Second phase, if you look at it, I am expecting a significant growth in 26. So when my growth comes in 26 is where I would go back to the numbers like what we were speaking about, 250, 260 days. The kind of numbers that we have been seeing in 23 is what you will see in 26 is what we are planning for. That's a broad plan on the working capital side. On the revenue side also, if you look at it, it's a similar approach that H2 will give the growth, which will ensure that my FY25 and FY24 are in similar range. And 26 is where I grow significantly, maybe 25-30% and above, which will then give me a room for liquidation of working capital, as well as also my base number will be better.
All right. Let's talk about the second half for the overall business on the whole. You continue to guide between 26 to 28% sort of margins. And in the first half, you've done just about 24%. So that tells you that the room for improvement in the second half is significant. And also the first half, your revenues are down 30%, your EBITDA is down 36%, net profit is nearly halved. By the end of this year, if we were to look at your overall performance, where do you think the revenue would be, the EBITDA margin? You've given us a band, and the net profit. How does that compare to all of FY24?
So, okay, let me start with the margins first, which is the EBITDA margins. My EBITDA margins are, as I was mentioning, it will be the 25 to 27% band, which have been historically, because mind you, 26 to 28, I used to guide when we were only talking about the standalone side. When we look at the console, the NFAT numbers also come in, and that's the reason I am guiding in the range of 25 to 27%. And that we believe that should be achievable as we go, right? That's one part of it. Now, let's say on the second part of the PAT side, PAT is a clear translation from my my depreciation and interest, which will translate into that. Depreciation is in the range of around about 80 odd crores, and that 85 crores. So that will be translation. In terms of revenue, that's as I was saying, that the kind of demand that now we are seeing, especially from my customers on the agro side, we believe that the agro demand is now picking up. Pharma anyways have picked up. Pharma is continuing to grow. Last year we launched a significant number of new molecules in the pharma side, which has now started giving me revenue, and it is ramping up. So pharma today is contributing around about 20% of my revenue, which historically used to be 4%. So that's again the growth that I'm seeing. So end in end, I should be ending up around the 24 number in 25, maybe plus or minus 5 percentage point is what I would put it at as of now.
Right. Very quickly, Vishal, due to paucity of time, just squeezing in one last question. Your LOIs have been increasing significantly, but are they converting to revenues? Because for FY22, you were at 2,600, FY23 was 1,000. How much have you added via LOIs in FY25? And what's the conversion timeline, if you could share that with us as well?
Lovely. So see, LOIs typically are 2 plus 2 plus 2, as I say. So 2 years to get to the LOI, 2 years from LOI to commercialization, and 2 to 3 years from commercialization to ramp up to the full capacity. Now let's look at in 2022, I had done 2,600 crores of LOIs, that what you mentioned. So typically, if I divide it by 5 to 6 years, which is an average time period, we have talked about 450 to 500 crores of revenue. I am looking at last year we did a revenue of around 200 and plus from the LOIs and all. We expect this year to be also 200 to 250 kind of a number, which means I have gone to 50% of the revenue that I would expect from these kind of LOIs of 2022. And now next year onwards, I will start commercializing the 23 and 24 also, which will further give me the growth.
All right, we take that point. Thank you so much for joining in and giving us your details. We'll obviously look forward to you ending this year with a difference of just 5% versus last year's revenue, and that will indicate a strong second half of this year as against what has happened in the first half. And we'll await your margins being between 25 to 26% as well. Wish you good luck for the remainder of this year. With that, we'll take a short break. On that note, also give you some programming updates. The 11th SBI Banking and Economics Conclave will go underway this afternoon. You can catch Finance Minister Nirmala Sitharaman addressing the gathering at 2:45 p.m. today. Other guests of honor include the likes of Finance Secretary M. Nagaraju, Revenue Secretary Sanjay Malhotra, Chief Economic Advisor Anant Nageshwaran, and also the IRDAI Chairperson. We have Debashish Panda and ex-SEBI Chairman M. Damodharan. You can catch exclusive coverage of this entire event only on CNBC-TV18.